It's about that time of day again. My name is Joseph. Monday evening, November 26th. Welcome back to your nightly newsletter. I help new traders just like you earn consistent profits using a simple three-step trading strategy. And my plan this evening is to identify the best locations to look for my favorite entry patterns tomorrow morning in my trade room. And tonight, we're covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, oil is bullish into consolidation this evening, so I'm looking for a failed bear breakout for buying opportunities using the two-try rule tomorrow morning. The S&P is bullish with a wide channel tonight, and that tells me to look for a deep pullback off the highs, and I'm watching for seller failures to buy it right back up tomorrow morning. The Nasdaq is also bullish with a wide spike in channel. So my plan is to buy the low of this channel, but there's one big clue on the Nasdaq tonight that tells me precisely which pattern will work best. Don't forget about gold. The yellow metal is bullish with a range tonight. So my plan is to look for buying opportunities, and I'm focused below that range using that two-try failure. Euro, last but not least tonight, Euro is bearish, and I'm waiting to see if this chart turns into a range tomorrow or if it pushes through with a channel. Whether it's a range or a channel, I've got a great plan for both situations on the euro. Boy, great to be back with you guys after a holiday break. Hope you guys had your fair share of stuffing and turkey. We're back in the action, though, here this week. We got a big week ahead of us, and as always, I have a great newsletter in store for you guys and gals tonight. But before we get into charts tonight, I need to remind you, make sure you never miss a video by joining our mailing list. You can find the opt-in form right at the top of the page here at Sideways Markets. And if you're not joining me tomorrow morning in the trade room, the next best option is to download all the charts from tonight's video. You can find all the charts from the video tonight. There's a big button on our blog right below this video. Follow that button and have those charts ready for tomorrow. And don't forget, if you have any questions about anything covered in this video tonight, please remember to post them in the comment section below. And if you like what you see, please help support this channel by subscribing, and when you do, hit that bell icon so you get notified every time I post something new. As always, it's great to be back with you guys once again. Let's not waste any more valuable time. Let's get ready for tomorrow's session by starting off this evening with the economic news calendar for tomorrow morning. Tomorrow's the 27th day of November. We have shaken off all the L-tryptophan from the turkey and getting back in the action here this week. No major news tomorrow on the calendar. You'll notice we got some minor stuff here, kind of clearing up the charts tomorrow, but not a lot on the calendar here for tomorrow. We won't see that big red star news until Wednesday and Thursday. You'll notice Wednesday, we're going to start getting some of these big chunks of news on Wednesday, Thursday, and then Friday, we got the G20 summit going into this weekend. There are rumors about meetings between Russia, U.S., and China. So I'm sure, that's going to be taking up some headlines as we get later in the week. But for right now, though, tomorrow, Tuesday the 27th, we are, for the most part, pretty much blue skies here ahead of us. There's not a lot of turbulence on the calendar here for tomorrow. But as always, though, we're going to be keeping our eyes and ears open tomorrow for unscheduled announcements from OPEC. We continue to look for more drama coming out of Europe. It's never a dull moment, right? We always seem to have something moving here every morning in our trade room. We just don't have any scheduled news tomorrow. We should see more of that, though, start to come into play right on Wednesday and Thursday. So tune in tomorrow night. We'll talk more about how the news will play out on Wednesday and Thursday, but for tomorrow, there's not a lot on the calendar here to worry about for tomorrow, which means 8 o'clock Eastern time, right? We'll hope to see you guys there with me as we do every morning in our trade room. Speaking of the trade room, tomorrow morning, we're going to go crude oil, S&P, Nasdaq, gold, and euro. Starting off tonight with oil. Oil is bullish with a trading range and a possible hidden channel on the chart tonight. The momentum is clearly bullish. You can see this momentum here on the chart. We're clearly bullish, right, in the medium term. So my plan is definitely to buy below this range, right? Bullish into that trading range. I want to buy below the range. What I'll do is I'll use that one try two-try failure pattern. To do that, I'd also like to include, if at all possible, the low of this hidden channel here tonight as well. You'll kind of notice how I'm drawing that hidden channel in there. It might be a little bit higher, might be a little bit lower there, but I think that'll be a good spot there for. I'd love to incorporate the low of that hidden channel as well. So the bottom line is we're definitely bullish here on oil, but it looks like we're either you want to call this a triangle maybe, call it a triangle if you want. I've got it labeled as a range like this. I take that range, I copy and paste the range down, find support here, copy and paste the range up, find resistance there. I like that support level at 31. That's a pretty nice support level there. I also, again, like the hidden channel here as well. So, bottom line is we're bullish. We're going into a trading range. The best way to trade a bull market into a trading range is to use what we call the two-try failure pattern. I want to see us get one attempt to go lower, two attempts to go lower, and then once we see those sellers trying once and trying twice, again, I'd love to be able to include this off the low of that channel, right? Then I can look to buy into the stops of those sellers, right? Imagine now where the stop losses will be once those sellers sell once they try twice. There's going to be a ton of stops waiting just above those highs, and that's exactly where I'll be looking to buy into tomorrow morning. Now, there are lots of different variations of what the two-try failure pattern could look like. For example, we may just get a very shallow 1, 2 and go from there. It may be more of a deeper with a nested 1, 2 from there, right? There's a couple different variations of that two-try failure pattern. And by the way, if you want to learn more about the two-try failure pattern and all of its glory, all of its different variations, I've got a great free trading course. I'll put a link in the upper right-hand corner here for you guys. Grab that link in the upper right-hand corner. I'll also put a big red button right below the video tonight on our blog. Grab that free course, because inside that free course, you'll not only learn all of my favorite entry patterns, but you'll see hundreds of examples of real opportunities that we find every day in our trade room. So definitely worth your time. If you want to learn more about patterns like the two-try failure, right? That's definitely something, right, that we'll look forward to teaching you more about in that free trading course. But for right now, though, it's a bull market into a trading range. That tells me buy low, one try, two try. Again, there's a couple variations of it. It could be the deeper nested two try, where a deep pullback, 1, 2, and then go, or it could be a very shallow 1, 2, and go from there. That's the overall plan there, right, on the oil. And again, we'll be executing this plan tomorrow morning, 8 o'clock Eastern time, with all of our members in the trade room. Let's keep going. Next up here now, over from the oil, now over to the S&P. The S&P is bullish with a spike in channel pattern on the chart tonight, so I need to stay patient and look for buying into seller failures on a deep pullback tomorrow morning. The challenge right now that I see on the S&P is going to be the width of this channel. It's a really, really wide channel. And the reason why wide channels are a little bit difficult is because of momentum. As the market pulls back to the low of that channel, you don't want to just buy the low of the channel. You want to let those sellers try and fail, right? Like, for example, back here, see how the market pushed lower here, right? That strong move down. I always, whenever the channel's wide like this, I always know that momentum could have easily dragged that another leg lower. So I don't like to buy just off the low of that channel. What I'll do is I'll wait for the market to pull back. Then as we pull back to the moving average, I'm going to anticipate those sellers are going to try again. Once I see them try again, you can see an example of that back here, right? See how the bears tried to sell into that moving average? Once they try again, then we should have the ability now, right, to be a buyer into their failure, right, into their stops. That way we can buy off the low of this channel without just blindly buying into that low. So because we have this really wide channel here, I'm expecting here that eventually we'll see the market rally or run to finish off that move. And then once we've got that market down at the lows, right, it'll probably look a lot like this, where we'll have to be aware that as we pull back to that moving average, you're going to see sellers likely try again. Now, the odds aren't that good they're going to be successful, but I want to wait for them to try and then start to eyeball where their stops are going to be, right? I want to start thinking about where can I buy off the low so I could risk small, right? Small amount of risk into a big amount of reward, and I can also buy right into those stop losses of those sellers. So wide channels, when I see a wide channel, it tells me momentum. So of course, if we see this market end up pulling back, I know they're going to try one more time. I want to let them try that second time, then look for the buy right into their failure. Now, another thing you might see is we may see it really start to pull back, like a real strong pullback. If that's the case, I'm going to look for what I call that nested two try, which is the 1, it's the 2. I'm going to make sure those sellers really try and fail, right? Really try and fail. It's a little bit of a different adjustment if we get that deeper pullback. And of course, because of that deeper pull, because of the width of this channel, I would expect that momentum to be able to gain some steam here. That would cause me to look for that hidden channel, that hidden or nested two try here. Then once again, once we have the 1, 2, then we can look for those sellers and we can buy right into their failure. Now, it's also important to keep in mind too, this might be a trading range. You know, you can kind of see there, it might end up becoming a trading range tomorrow. If it does turn sideways into a range, and we'll know that because it will go up and then back down again. If that's the case, we'll use that same basic plan that we talked about on oil, where we'll use that 1 try, that 2 try failure. And again, there are a couple different variations of that pattern, but the bottom line is once we do see it confirm with a range, we'll then want to make sure we wait for 1, right? Wait for 2 attempts, those bears, and then we'll buy into their stops on the way back up into that range. So a relatively easy plan here on the S&P. And you can see whether or not we turn into a range and we're buying with a 2 try there, or we wait for this thing to finish off that move down, wait for those sellers to try and fail here. We're really looking to buy nice and low here right now, whether it would be a range, right, or whether it's a channel. So that's the basic plan for the S&P. And again, tomorrow, 8 o'clock Eastern time, we're going to build on this plan, right, and build forward and look for those entry patterns tomorrow morning at 8 o'clock Eastern time. Let's keep going. Over the Nasdaq right now, Nasdaq is in a very, very similar situation tonight. The Nasdaq is bullish with its own version of a wide spike and channel. So my plan is to look for buying opportunities off the low of this channel. One of the most important clues for me is how wide that channel is. You can see that midline acting as support and resistance. The width of this channel, right, is a big deal because the wide channels tell me by the time we get down to the low of that channel, we're going to have quite a bit of momentum for those bears, which means at that point, I want to make sure I let the sellers try. If they fail, I can then sell right into those seller failures. So as we pull back here, you know, imagine this now. Imagine we pull back now. The moving average comes over, right? That moving average comes over. I have to assume, much like we saw back here, right? Went down, pulled back, and failed. I have to assume here that sellers are going to try to sell off that moving average pullback. Again, because of the width of this channel. With the width of that channel being so wide, that momentum gets building. When that momentum gets building, sellers will come in and try to sell off that moving average. It's fine by me because I'm going to wait and see if they fail. And if they fail, I'm going to buy right into, right, those stop losses. If they're successful, right, what would a reversal look like? A reversal would be what we call the 1, 2, 3 reversal, right? We call it the 1, 2, 3 reversal. The 1, 2, 3 reversal would be we pull back to the low, we then pull back to touch the moving average, and then we explode off of that low, right? Exploding off of that low. The explosiveness off of that low is what's going to confirm for us now this trend has changed. I call it the 1, 2, 3 reversal. You could basically call it waiting for proof of that, right? Of that reversal. The bottom line is I don't trust being a seller just because the market pulls back. I mean, look at how many times, right, a market pulls back and it doesn't reverse the trend. So I can't just try to sell this based on a nice deep pullback. I've got to wait, because if those sellers fail, you'll see plenty of buyers just like me waiting to buy right into those stops as this market goes higher. So I want to see a strong move down. I want to see a pullback to that moving average, and I want to see that, right? I want to see that run lower, right? I want to see that run lower. Once we have that 1, 2, 3, then I'm going to mark up that swing, right? That prior low, that'll act as resistance. I'm going to mark up that swing that creates a new channel, right? And we'll create that channel. And then now I've got my sweet spot right there. My sweet spot now is to sell off of that, right? Off of that hidden channel, right? That hidden channel coming off of that trend reversal. So that's the plan if the market turns bearish tomorrow. And as I mentioned earlier about that free trading course, if you want to learn more about hidden channels, what a reversal looks like, when to fade the pullback and when to sell the pullback, I cover all of these inside of that free trading course. Again, there's a link in the upper right-hand corner, right? That information icon, as well as that big red button right below the video tonight on our blog. If you're on YouTube right now, I'll put all the links in the description of that YouTube video. So we're looking for a pullback here on the Nasdaq. Again, right, looking for that 1, 2 failure to go back up, right? Or looking for that 1, 2, 3, right? That hidden channel after that 1, 2, 3 reversal. And again, you can learn more about those patterns by grabbing that free trading course. All right, pretty easy there on the Nasdaq. The last thing that might happen here is maybe it's a range, right? Maybe it's a range there, something like that, could be a range here. If that's the case, not much changes. We're still looking for that 1 try, 2 try, failure, right? Let those bears try once, let them try twice. We're still looking to buy in roughly the same locations here again on the Nasdaq. So whether it's a channel or whether it's a range, we're pretty much looking for the same stuff here right now. We're looking for sellers to try and fail. And again, if the sellers are successful, we've got a great plan for that as well. Let's keep going. The Nasdaq now over to the gold. Now, gold has been plagued by some low volume price action lately. So you'll notice I'm really slowing down this gold right now to a 5,000 tick chart, because it's really the only thing that really fits right now for a good chart time frame. Now keep in mind, I am not going to trade off of this time frame. The goal of tonight's video is just to get our prep work ready for tomorrow morning's trading session, which we open up at 8 o'clock Eastern time. The goal tonight is to get us ready for tomorrow. So tomorrow we'll use a much faster time frame. I like to use the 610 tick and the 800 tick on gold. And so we'll do that together tomorrow morning with all of our clients in the trade room. But for now though, on gold, it's very easy to see we are bullish, right? There's definitely a bullish tone to this market right now, and then into a trading range, right? Into a trading range. Now, you can see it's a wide range, right? Look at how wide that range is. You could probably break this range in half and have kind of 2 separate ranges, right? 2 separate ranges inside of the range. It's a really wide range. Now, again, whenever we talk about wide channels or wide ranges, we know that momentum is a big piece of this puzzle. And so really at this point, we can put kind of everything together that we've talked about so far already. The wide range tells me expect that momentum, and then a range overall tells me use that 2 try, right? Use that 2 try rule to buy below that low. So gold is bullish into a trading range. I want to buy nice and low at levels of support. I've got a great key support level here that I'm still watching. We talked about this last week on the newsletter. That 17.2 to 18 even area, that's a really great spot here for us to be a buyer tomorrow. All we really need right now is a 2 try failure. Anytime I see a trading range, I always know to go with the bias. It's a bull bias, so I want to buy buy at support. I've got my eyes on some key levels of support down here, so that's where I'm looking to be a buyer. The entry pattern that we're going to try to use tomorrow would be a 1 try, a 2 try, a failure pattern. Now, remember the old saying, and if you've watched my newsletter religiously every evening, you probably have heard me say this before. When the range is wide, the 2 try is usually wide. When the range is wide, the 2 try is usually pretty wide. You know, for example, if I have a narrow range with a bull bias, then usually the 2 try failure pattern, and again, I'll give you more examples of this as part of that free trading course, but when it's a narrow range like this, it's usually a pretty small 1, 2 back up, right? But when it's a really wide range, right, when the range is really wide like that, right, for example, a wide range, now you can expect to go lower, pull back, try again, and then go, right? It's a much wider, right? There's a greater separation between the 2 tries. That's what I'm getting at here. When the range is wide, that momentum gets built. And so when that momentum builds up, the sellers will try to sell into it, right? That's why it's always a bit of a more of a delayed or a wider 2 try there, some of the hiccups there, right? So that's what I'm looking for right here on the gold. So as we go lower, I'm expecting this to take a little bit longer to get that 2nd try, and then we can look for those buys going back up into that range. Let those sellers try once, let those sellers try twice. And then once we see that 2nd try, then we'll look for a faster time frame. We'll look for a more precise entry trigger as we try to get in coming off of that low. The hardest part in my experience though with these wide ranges is staying out of the middle. You'll notice a lot of crap has been happening here right in the middle of that range. I would encourage you to stay out of that middle and really try to be disciplined to buy nice and low. It's a bull bias, so I'm not really looking to be a buyer at these highs. But what would this scenario look like? What would a breakout scenario look like? Well, we already talked about the 1, 2, 3 reversal, right? Remember the last chart we talked about that 1, 2, 3 reversal. What does it take, guys? It takes a strong move. It takes a pullback to the moving average, right? That's 1, that's 2, and then 3 is an explosiveness off the moving average. Ultimately, the 1, 2, 3 reversal is almost identical to a 1, 2, 3 breakout. So for example, right, if we were to go through these highs, I don't want to buy up here because it's a range, and I'd be buying high. What I have to do is I have to wait for the pullback and the go. If I can see us really jump off of that pullback, right? If I can see us jump off that pullback, if we can get a nice strong 1, a pullback 2, and 3 of that 1, 2, 3 breakout of that strong break higher, then I can do a lot more, right? I can be a lot more confident now. Now what I'll do is I'll mark up that high, I'm going to mark up that channel, right? And again, we're going to find that hidden channel, right? And that hidden channel, I want to buy the low of that hidden channel. Now remember, I'm just going over the potential scenario for tomorrow, and then depending on what we actually get tomorrow, we'll trade those patterns right in our trade room. The most important thing right now is if you want to learn more about these breakouts, what do I constitute for a breakout? What does the hidden channel look like? How do you calculate it, right? Where's the entries on that? Make sure you grab that free trading course, because that free course in the upper right-hand corner will fill in a lot of these blanks here. I just don't have enough time to cover all those details and teach that stuff every evening on this newsletter. My goal tonight is to get my clients ready for tomorrow. I want to teach you more about our trading strategy so you know what to look for tomorrow, and then rest assured we're going to fill in all the gaps. We'll find all the precise entry triggers tomorrow morning in our trade room. So here on gold, stay away from the middle. We're going to buy that low, 1 try, 2 try, right, back up in. We're going to look for that nice strong break, right, that nice strong break. If we can get that 1, 2, 3 breakout, mark up the highs, mark up that new channel, right, that gives me now my sweet spot, and I can buy off the low, right, with the proper entry trigger. So relatively easy plan there for tomorrow on gold. And again, you know exactly where to go if you want more information on all of these entry patterns. Let's keep going. Wrapping up tonight here on the euro. The euro is bearish with a strong move lower to finish today's session. But the way we finish today's session right at the low is a big concern for me. I want to sell this market, but I don't want to sell low, right? See how the market, sorry about that. See how we had a strong move down, we pull back, and we're right there, right at that low right now. I don't want to sell down here. We're bearish. I want to be a seller, but just not here. I don't want to sell right here. So knowing this, there are really two different scenarios I'm looking for tomorrow. One is, do we bounce off that low? If we bounce off that low, then this becomes a range. And then my goal is to use, anytime we get a range, right? We talked about this before. Anytime we have a range, it's a two try failure pattern, right? Let those buyers try once, let those buyers try twice. And remember, if it does bounce off of this low and turns into a trading range environment, don't forget, there are lots of different ways we use the two-try failure pattern. There could be the straight shallow one-try, two-try. There could be the much larger nested two-try, right? Kind of a hidden or inside two-try. So there's a lot of different variations of that two-try failure pattern. I want to teach you all the details of that. So make sure you grab that free course right below the video tonight or in the upper right-hand corner in that information icon. That way you can learn more about those two-try failure patterns, right? Want to go up, 1, 2, and then back down. I want to stay away from the middle, right? If we go back into this range here, I really want to stay away from that middle. It's very tempting here, but what you really want to try to do is get it up, and then sell back down from there. That'll be the most reliable way to sell this euro. The other variation is if it keeps going lower, right? If it keeps going lower, that's the second thing I want to be ready for tomorrow. If we bounce off of this low, then we know this becomes a range, and we want to sell as high as we can up around the high of that range. If we go lower, the key here is to get that moving average down below that current low, right? That low right there. So if I can get this moving average to clear below the current low, then I know I have enough momentum to the downside, and I can start looking for new entry patterns from there. See, what happens a lot of times is, the market will push below it and then come right back up. So you really got to be careful trying to sell down here, right? Because as the market moves lower, what's going to happen? Profit taking. And as those sellers take profit, price will tend to jump right back up into that range. So my solution is to make sure we see enough strength going lower to get that moving average below that low. Once we have the moving average below that low, it will probably end up being some sort of channel here. It'll probably be a real narrow channel. Anytime I see a real narrow channel, I always know that I trade outside that channel. So imagine for a second now, as we go lower here, we get this really narrow channel, right? Narrow channels also have a lot of important clues. We've talked about wide channels and wide ranges. Narrow channels have a similar effect. Because there's not much space inside that channel, we oftentimes need to get a real deep pullback just because there's no space to sell, right? Sellers aren't going to want to sell the top of that channel because there's no space to profit. There's no real, you can't risk small to earn large that way. So what I find the most effective way to do it is when we have a narrow channel like this is really try to get this jump, right? Get that nice big move. And as we get that nice big move, it oftentimes sets up to what I call that nested two-try failure. That one, that two, and then sell back down, right? Literally, let those buyers try to buy it once, let them try to buy it twice, and we'll sell right into their failures, right? And let it collapse right back down again. And that's probably what's going to happen tomorrow morning, right? So if we do end up continuing here going lower, bottom line is if we see a real narrow channel like this, right, and this thing's still, right, it's still grinding lower here, right, like it looks like it might want to do it, we'll get that nice strong move up, 1, 2, right? Nested 2 try. And again, you can learn a lot more details about that 2 try pattern inside the free trading course, right? But that nested 2 try be a great spot here now for us to sell right back down again. Because again, what's going to happen is it's going to jump, right? It'll look real aggressive. It'll look real aggressive. It'll look something like this, right? Where it jumps up and you want to let it go once, twice, and then sell into those stops, just like we saw right earlier in today's session. So strong move down. If we do get that sharp spike up, 1, 2, and then back down, again, it's very similar to what we saw right earlier on. And again, right, if you want to see literally hundreds of examples of these patterns, just grab that free course. I got them all included there for you guys. And all I need is your name and your email address. The email address to send you the email so you have access to the member section of our website. Another thing to look for here, if we do grow lower here, is a spike in channel. Oftentimes we break free of this stuff, right? We turn sideways a bit, right, into a channel like that. So keep your eyes open for a spike in channel. If we do get a spike in channel, then we know it's traps, right? Then we know it's all about traps, and we're looking for traps up above those prior swings, right? Trap patterns are another one of my favorite entry patterns. And again, we'll look to use those on a faster time frame. This is a 2000 tick chart. I typically use anywhere between a 377 and a 610 tick chart on my entry time frames. And you'll see a lot more of that inside the free course. But the most important thing is if we do go lower here tomorrow, is it a spike in channel? If we get a spike in channel, then we're looking for those traps, right, up above those prior swings, right? So mark up those prior swings and then look for those trap patterns, right, up above those prior swings. And again, all going to make sure we get that nice strong move, get the moving average down below that low, because we don't want to fall victim to that fake out breakout, right? Those fake out breakouts happen all the time. Speaking of a fake out breakout pull or fake out breakout pattern, right? If we do see it run back up like this, this is where we can get into that fake out breakout 1, 2, and we could buy into those seller failures. It's a little bit aggressive, but if we see those sellers, right? If we see this market just get kicked back, right? Happens all the time. If we see this little fake out breakout below that low, right? Then what I can do is I can then look for those sellers to, I wouldn't say foolishly, but sellers, they're playing with fire right there, because it's more likely you're going to be a range. If we get that kickback off of that low, let those bears come in, let them try once, let them try twice, and I'll buy right into those stops. It's a little bit more aggressive, but as long as you know how to use that 2 try failure pattern, and you know that if we do get kicked back, where's the target? The target is back to the high of that range, right? Because again, if we do end up bouncing here, it becomes a range. And so if we get kicked back here, 1, 2, nested 2 try, and then right back up to retest where the battle zone is right now. And maybe from there, if we can get a full-blown reversal, right, back up around that 14,500, 14,600, right, for tomorrow. And again, what does a full reversal look like? A full reversal would be a strength, a pullback, right, and a strong move off. What do we call that? The 1, 2, 3 reversal, right? So strong move, pull back to the moving average, and then strong move through. If we do get the reversal, then mark up that high, mark up those highs, right? Find that hidden channel, and you got it. We're buying the low of that hidden channel. All right, guys. So now we've got ourselves all planned out here for that euro. Tomorrow morning, 8 o'clock Eastern time, we're opening up our trade room. I hope to see you there with me. We've gone over the entire plan tonight with all the basic tools for tomorrow. Now all we're waiting on is what will we get. Tomorrow morning, we'll be there together tomorrow, 8 o'clock Eastern time. If you're a member, I look forward to seeing you there. We get together every morning with our advanced members in our trade room. We go over all the rules, we go over all the patterns, and then we start executing that strategy together, right? Opening up tomorrow morning bright and early. If you're not a member here at School of Trade, I would encourage you, join that free trial. I'm going to send you a free pass. Come out and join me as a guest in the trade room this week so you can get access to our trade trade room by taking part of that free trial. That free trial will also give you a free trading course so you can learn all the basics, right, of our trading strategy, all the technical analysis, all the entry patterns that we like to use, and hundreds of hours of great examples directly from our trade room. So grab the free trial, learn more about membership, and don't forget, right, you might be alone at your desk right now, but you're never alone, right, in your trading career, not when you're working with me. So pick up the phone and call me anytime if you have any questions. We have live support here on the right-hand side of the website as well. Drop me a comment in the comment section below. Give me a thumbs up if you like the video. And as always, it is great to be back with you guys and gals. Hope you had a great holiday. The countdown is on till the end of the year, and I'm expecting another great day tomorrow morning. I hope to see you there with me. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.